Greece's Prime Minister has risked default by calling for a referendum on debt deal. EU ministers debate Plan B. On the other sidelines at Greek bank, ATMs grow longer after the government's move to shut banks and impose capital controls.
The long queues at the Greek bank ATMs grew longer in the early hours of Monday after the government moved to check the growing strains on its crippled financial system by closing its banks and imposing capital controls in a dramatic step that brought the prospect of being forced out of the euro into plain sight. Banks are expected to be closed all next week with a daily €60 limit on cash withdrawals from cash machines, which will reopen on Tuesday, that is June 30th. Capital controls are likely to last for many months at least.
We were asked to say yes or no to that proposal, and what we are doing now, as Democrats ought to do, is ask the Greek people to tell us whether we should say that yes or that no.
The failure to reach a deal with creditors leaves Greece set to default on €1.6 billion of loans from the International Monetary Fund that fall due Tuesday. Athens must repay billions of euros to the European Central Bank in the next months. The lines forming into the night in front of the shrinking number of bank machines with cash still available highlighted the scale of the disaster now facing Greeks, battered after more than 6 years of grinding economic decline. The bank holiday announced by Tsipras is expected to last at least until Monday, that is July 6th, the day after the planned referendum. The Athens Stock Exchange will also be closed as the government tries to manage the financial fallout. With agency inputs, Business Desk, DD News.